Okay, hi. I hope all of you are doing well. Today is 17th of May. I wanted to talk about something. I'm not currently trading after the eye surgery I had. I have a little bit of a hard time to sit in front of charts for too long, so I'm kind of taking a little bit of break on this side. Also, next week, basically, I have to move everything that I have. So I will be quite busy. I think I will be mostly looking at some of the swing trades if they present themselves. I'm not sure if I will have any time for actual day trading. But from what I have seen basically in the Discord, in the last month or so, since all of you got there, there has been a lot of talk about altcoins, all the time, and this is not something that, although this is not something that I personally do. On the other hand, I believe there is a certain way and kind of certain edge in the altcoin markets, which um, not many people basically are looking at it from this perspective, and this is something that I have been testing, but I haven't really traded it that much to be like this is exactly how I do it. But so I hope this video will be more like a open guide for you to go and test things out, instead of like this is just how I do things. um, and yeah, it's definitely has been something very interesting to me, because over the time, as I am on Twitter, I, for example, got some offers to work and trade with some like crypto firms, but every time I had any kind of call with them, they always kind of focused on mostly trading altcoins, and all these different narratives, which is something I never really did. So it always kind of ended up there. But on the other hand, I always wanted to learn a little bit, and I've been getting more and more into it, and this is kind of my side thing that I am researching, lately. So when it comes to trading altcoins, basically, the first things first, this is a correlation matrix of some of the major kind of crypto pairs, over the last year or so. The crypto watch. As you can see, the correlation is quite high. The most kind of important thing, because obviously these things, this is kind of like ultimately, like I said, there is a Luna still there. I think they should probably get rid of that in this point. But the correlation in overall crypto space is quite high, and especially when we are taking a look at Bitcoin and ETH, it's 0.87. That's almost one-to-one correlation. So basically, this is bringing the issue which I spoke about previously, that if you are trading both of these things at the same time, you are basically taking one trade. If Bitcoin dumps, ETH is very likely to dump as well. So if you are long both of these things, and you get stopped out, you are in most cases will end up with basically two losses instead of one. And this goes for all these kind of altcoins. Obviously, the correlation breaks in the most kind of cases is that the correlation is not broken in kind of a directional way. So if Bitcoin is going up, something like Solana is also very, very likely to go up, but it will go up more. This is obviously due to the fact it's a kind of a higher beta asset. There is less liquidity and less volume traded in these altcoins. Therefore, if they move for the both upside and the downside, they will just move the same way, but they will move more or less, based on the direction, basically. And this is all due to the fact that, like I said, there is a less people are trading something like FTM compared to Bitcoin, basically. When it comes to Bitcoin S&P 500 correlation is the same thing, just Bitcoin in this case is the higher beta asset, because obviously liquidity in BTC is kind of less than in even S&P, which is basically the most traded futures contract in the world. Um, so you have this kind of a issue, coming into the altcoin markets. And so the first thing, when I obviously got into crypto, I was kind of a testing the usual stuff, using footprints, using the CVD, using all the kind of things that I've been using um, in every other market. Obviously the most kind of popular website for it is Trading Light. I think it's cost around $50 a month. You have these heat maps, which I guess my opinion on those, but there are indicators, there are footprint charts in that, and some there is quite a library of kind of a custom scripts. You can see there are some like liquidations deltas and stuff as in these cases. But at the end of the day, I'm not sure if this is something like a the best way to do things, basically, because it doesn't really deal with the fact that if you, for example, see, if you are trading Solana, and you will see some pattern on footprint on any kind of time frame, or you will see some CVD absorption going on some of the exchanges. You are still basically trading just the BTC on steroids. So these things are not really too I'm not sure if this is basically the best way of doing things. Let's say you are still kind of picking a coin that you like, basically. Like, I know a lot of people trade Solana because they generally like it. They just use trade NFTs there or whatever. They will be like, okay, I'm going to be trading perps on Solana because this is something that I personally like, this is something that I personally use. Some people have it with the other layer ones, or stuff like that. So you can kind of understand that this is not really kind of dealing with the issue of this kind of a whole market correlations. So what I kind of figured out is looking from things not based on fundamentals, not based on kind of a personal preference, but mostly trying to look at actual kind of data that will basically indicate to you that this kind of a short-term correlation, that this kind of long-term correlation will break in a short term, basically. So looking things that have kind of evidence of possibility of breaking correlations, basically, for a short period of time, where you can kind of take a trades without looking at BTC too much, without looking at anything else, basically. And there are a few ways how I did that. And first of all, you kind of need to understand that why some of these kind of edges will exist, because obviously when it comes to crypto, any type of inefficiency is very quickly picked up, by algorithms and by bots. There are any if you obviously back in the day, for example in 2015, not like I was in crypto back then, but there used to be these opportunities when on for example Korean exchange, BTC was trading for $1,000 less than in US exchange. So you had these kind of arbitrage opportunities where you can just kind of buy BTC at one, sell at the other, and capture this kind of a spread. These things happen nowadays as well, especially with kind of all these kind of shit coins, or different kind of DeFi products, but they are so quickly picked up by algorithms. And this is actually something I've talked about with someone who does this stuff, so this is not just me kind of making things up. But a lot of these edges will be kind of um, will disappear fairly quickly. So you need to always understand that the trades that you are taking are going to uh, be for basically a very short period of time. And the other thing is that a lot of the things that you will find, or a lot of the things that I have found, are going to be on. I was only looking at FTX, to be fair. I didn't have that much time to look elsewhere, but I have found some nice opportunities. I will show you the one trade that I found um, for the last couple of days, which played out. But it's on extremely thin markets. These are related shit coins. The thing that I was looking to trade at, it's some project that basically racked like 8 months ago, and FTX still has the perpetual contract listed for any type of reason. So the daily volume on that was around $150,000. Therefore, if you really would kind of just step in with any type of size, you would basically move the market. So you need to be if you trade with small accounts, it's not really an issue, and I think this is kind of a cool way to actually try to grow a small account, try to capture these inefficiencies. But a lot of these things, if they are kind of liquid enough, once again they will picked up by a smart people very quickly. So you need to understand that, and if you find something on a very thin market, you need to execute it properly. Kind of calculate the size you are going in, and use something like a T-Web, for example. But you need to be really careful, basically. So I will take you through some tools that I found useful, and how I use them. First thing is this Telegram channel, the Daily Funding. This is really nice channel. It's free on Telegram, which kind of sends all the news from a DeFi derivatives markets. Everything that is happening in the DeFi derivative space, either if it's futures, options, or whatever. You will find news there. So that's actually kind of cool, because a lot of these new things obviously have these kind of inefficiencies when new markets are listed. Something from kind of top of my head, and I don't think this is this is a thing anymore. But if you are aware of Mango markets, this is a derivatives market on a Solana. If I'm gonna go here to the platform, I don't know if this thing will want from me to log in. You will obviously need a wallet for this. I have a Phantom wallet up here. I don't think I use it, but you can see, for example, here, if I would trade a perpetual swap on a Solana, there is a 17% APR when it comes to the funding rate. Obviously, funding here is done every hour, but if I would basically go short on Solana on the Mango markets, and this wouldn't change, you would need to then go and find out what is how this has been performing. But I suppose this is quite a nice approach, basic estimation. And so basically, if I would open a short here on the Sol Perp, and I would let it held for a year, no matter how price would change in a year, I would be getting a 17% APR, basically gain on my position, because I held a short opened here on the Mango markets. There are some different markets here as well. They have a perps on Luna, for example, which is not trading anymore. Why this is trading at $2 here? Okay, this is definitely very interesting. But if I would take a look at something like SRM, for example, there is a minus 288 percent APR, and I think this is because the SRM has their own kind of staking program. You need to understand these tokens a little bit, but this is not a rocket science. If I would take a look at AVAX, minus 93% APR. Therefore, if I will open a long position on AVAX here on Mango, and I will hold it, open for a year, I'm getting 93%. But obviously, if the market, declines, if the market goes against me, I am in kind of a trouble, because obviously I have a naked long opened, ideally without a stop loss, because obviously, you don't know where this thing is gonna go. So this is a little bit of issue. The second issue, which you can already see here, there's only 284,000 open interest, 200,000 24-hour volume. So once again, you need to be a little bit cautious when you're executing the trade. So how I could deal with this is obviously I can open a long on the Mango markets where there is really high negative funding, and I can hedge it on something like FTX, for example. And this is the nice website, the ftxpremiums.com, where you can just look at something like AVAX, which is here, and here are the funding rates, and you can see that all time there is a 7% positive funding rate. Okay, so in last days it's minus 6%, but still I could open a short here, which would make my position basically the delta neutral, and I would just collect the funding. Obviously, as it kind of seems here, if I would open a short, this is in all time kind of in this little bit of positive, I would pay a little bit on FTX, but I would receive funding on the Mango markets, which is basically much higher. The thing with this, obviously, if let's say that you would end up with like 70 or 80% APR, so obviously, how would you structure that trade? You would need a, let's say, $10,000 to short on the Mango markets, and you would need $10,000 to $10,000 to long on the Mango markets, and 10 grand to short on the FTX premiums. But obviously, let's say that over a year you would make $8,000 in this kind of a calculation, or however would these kind of funding rates would change. There is an issue though, because obviously you would need a little bit more than that. It's simply due to the reason that price itself will fluctuate. These exchanges, I'm not 100% sure how the Mango markets work, but you would basically need the extra collateral to in case you would get margin called. So you need to bear in mind that as well. So yeah, that's it's kind of a expensive trade to take. You are looking $30,000, let's say, to make 8 grand in a year. Is it worth it? That's up to you. But this is kind of a very simple delta neutral trade. I had an article about this on the blog. You can go read that. Usually, you need quite a bit of money to do that. Like I said, these things are very quickly picked up. Why I believe there is a still very high negative funding on this AVAX perpetual contract on Mango markets is because no one is trading that. There is, like I said, $200,000 daily volume. So for a smaller account, if you build your position, it's working fine. But if someone some large kind of institution wants to pick up, go short $1 million worth of AVAX or something like that, they can do that. So this is your typical delta neutral type of trade, and I wanted to cover this because it's kind of how this kind of funding trade works. And sometimes in very much special occasions, something like this happens. You will see that there will be a market which will look like something like this, and there is a minus 5,000 5,000% APR on this SRN perp, which is this token right here, basically. If I will go to Coin Analyze, which is the second website that it looks like TradingView, and every time I post about it on Twitter, everyone is asking me what TradingView indicators I have there. They just use the TradingView plugin, basically, and if you're gonna go to their indicators, you can see there is a aggregated, cumulative volume delta for coin margin contracts, for stablecoin contracts, for spot there is aggregated funding rate, aggregated, liquidations, open interest, and so on and so forth, and some other indicators, basically. So if I'm going to go take a look at this SRN perp, which has this huge kind of negative funding, if this is going to load anytime soon. Okay, nice one. This went well. Okay, let's give this a second try. It gets a little bit laggy when you try to find something, or maybe it's just from my end, and it's obviously not gonna work now as I try to do this video thing. Nice. Okay, so basically when you have a huge negative funding like this, and you can once again see, it's 165,000 volume, but you can see that here is a 0.5% predicted funding, and the funding on FTX is calculated, done every hour. So basically, if you are opening long position, you are making 12% every day on just because you have a open long position. This market, the issue with this is obviously this market is not really traded anywhere. I found the spot market for this on Bittrex and one other weird exchanges. But in a case like this, when these things are really in extremes, I would say it's actually worth it to just hold the naked long, and I will show you this. Basically, you will, on the coin analyze, you will open the chart, and you're gonna go to indicators, and you can take a look at aggregated predicted funding rate. So you can see that the funding basically started to drop at this kind of 0.5% around 5 days ago, which the price was actually in here. It's once again, this is a dead token. I don't know why this happened. I don't really care. But for this kind of a 5-day period, you are basically making a 70% on your position only by the fact that you are holding a long. You are getting paid every hour. There was this little bit of a spike here, where the funding goes kind of very highly positive. So in this case, you are actually paying. So this is something that I would basically consider to get out when I would see something like this. But as long as this thing looks like this, you are just good to go. You are good to hold your long. I would say in this kind of a 0.5 region, it's really worth to just hold a naked long. The market, especially after huge sell-offs, we just had, this is kind of a perfect environment for you want to be in a position, because the likelihood of a huge lag after the volatility event is not so big. So this is one of the first kind of a trades that you can start and to look at. Obviously, if you can hedge it somehow, it's better. But sometimes from time to time, these things are you will find things like this. And obviously, if you have a market which is only traded on perps, you have a massive negative funding there for everyone who is actually short, because like I said, it's a dead project basically. I checked their Twitter, they were kind of gone like 6 months ago or 8 months ago. Look at the chart, how this thing looks like. It was trading for 10 cents almost, and now just is on the way to zero basically, and I don't doubt it won't end up going to zero, but it got to the point basically where this is a crowded trade, where everyone is just kind of shorting this and just hoping for it to just go to zero, because why it wouldn't. There's no reason for this to go higher anytime soon or ever. But if you are going to happen to be in this type of situation where holding a short is getting very, very expensive, a lot of people will try to cover their short positions, and the market is more likely to actually push higher, because obviously you will get this kind of a short covering rally basically to the upside. So I would say in cases like this, it's another reason to have like the naked long open, because obviously if you think about this whole scenario and why this thing is happening, it's very unlikely that this will just kind of dump to zero immediately with funding like this. And this is how I would look at funding, not how most people on Twitter will post a Bitcoin chart, say funding is negative, we go to all-time high. But once again, the crypto is extremely kind of inefficient in this way, and you will find situations like this from time to time basically. So this is the first one. Like I said, this has been a nice trade. If you would get anywhere, basically whenever, since this thing started on 12th, the worst case scenario you would be getting here, and you just now got above the break even. But anywhere in here you are in profit, and you just made around 50%, let's say, on your position just by holding along. The volume is shit. Obviously, you need to, for this you can use the in-silicos terminal to just kind of a TWAP into the position. So this has been the one. There is another one which came to my mind, which had this huge short squeeze a couple months ago. I will just take a look if the case was kind of similar. It's the people token, which is how this was this kind of a DAO that tried to buy the constitution. They failed basically, but they ended up making a token, and then they just kind of quit the project overall. So it was this whole weird kind of thing, but they had this little bit of a short squeeze, which I think was somewhere in here, or I can't really remember when this was. I think it was in March, but this doesn't look to be the case for it. The funding here was overall quite neutral. How I did find this Labs thing, you will go to Levitas, which I would say, if this decides to load, is probably the best resource for the derivatives markets, and it's free, so that's really amazing. You will need a little bit of a time to learn how to use it, but you have the data from everything, not only futures. You have a lot of options data. You can look at options chains, different skew, the options order flow, where the interest is. This is a really good platform. They now have some stuff for move contracts as well. I haven't even looked at it, but if you're gonna go here to the all the derivatives tab, and you will click on FTX, there are all different exchanges. Like I said, I didn't have much time to go through every single of them. You will just open this kind of a tab where basically every single perp that is on FTX is now, I think. And what I did, I clicked here on funding, and it appeared here. It wasn't like I opened FTX perp and I just went through every single markets. I just used this thing and found it in a click of a button just a few days ago. Another very interesting thing is the open interest, and I know this is getting a lot of talks, and a lot of discussion how to use it, if people are using it correctly or not. In a most kind of a simplistic way, the open interest is can be interpreted like this, and I'm not going to go to different kind of functions of different types of perps and all the things like this, but from the simplest kind of a overview is there are 4 stations with the open interest, and I am very likely to type it wrong, so bear with me, but the price up, open interest up equals new longs, price down, open interest up equals new shorts, price up, open interest down is the short covering, and price down and open interest down, sorry, this is long covering. To make actually sure that I did this correctly, if you're gonna go to the Excel charts, click on the open interest here, go to settings, yeah, this is the thing, price up, open interest up, new longs, price down on open interest down, long covering, price down on open interest up, new shorts, and price up, open interest down, short covering. This obviously is fairly kind of a discretionary thing, because if I going to zoom out all the way to here and kind of see that this thing is happening, this seems like a new longs entering, there is this huge spike on the open interest on this down leg, so you have a lot of shorts, then this is where they covered, I suppose, a lot of new longs opened here. It can get very kind of very discretionary, I would say, how you are going to look at this thing, because obviously you will show this to a few different people and most of them will give you a different explanations. So once again, I was kind of thinking about this and tried to figure out, little like less discretionary way how to look at it, and I would say that it's worth to pay attention to the coins that have a huge open interest change with no to very little price change, basically. I have 2 examples of this, which I took a screenshots of. This is the first one, and this is the second one. This is the REN, and this is this thing. I have once again no idea what these things are, what these things do, no one cares at the end of the day. But if you're gonna take a look at this thing here, once again, I didn't go through all of these perps on FTX to just kind of find the things. I don't know why this is not working with me. Give this a second. There is this open interest change tab. You're gonna click on this from top to bottom, so sorry, the other way around, obviously. And these are the coins that had a huge open interest change recently. Obviously you can see the SRN is here because obviously people picking up on this huge negative funding thing, chasing it. But if you're gonna take a look at the price change, this thing, okay, this is UST, can see what happened here. Jesus. Okay, second attempt on this. Of course I have to do it again. Now the arrows are not there. Okay. Basically, if you're gonna take a look at these things, the price change is lighting up for most of them. Therefore, there has been some huge change of the open interest. You can see the open interest picked up a lot on these things, and all these things moved up mostly. The point is basically the move already happened. But then if you take a look at something like the REN here, it's actually down 2% on a day with the 40% change of the open interest, $1.4 million, which, with overall 5 million worth of positions opened, it's kind of decent change, and it changed 12% in last 24 hours. It has a negative funding, nothing too insane, minus 20% on the year, but that's nice, kind of a additional indicator that is actually worth to hold along for a bit. And it's 157 million market cap, so it's not actually bad. It's fairly liquid. So if I'm gonna take a look at the chart here, which is this one, you can see, we had this kind of a huge build up, I would say, in open interest here, which most likely there were all these shorts, they started to cover, and then you had this huge kind of spike. Then below it we have aggregated cumulative volume delta for spot and aggregated cumulative delta for futures. This is, once again, very often kind of a asked questions, how would you use these, and these are the only situations where I would use the CVD on higher time frames, because you want to see this type of divergence. Obviously the spot market is tend to be these kind of smarter people, usually with more money. That's the first thing. The second thing is, obviously, they cannot short. If you are trading spot, you only can buy things, you cannot sell them. So if you see the huge spike like this, with the huge open interest spike like this, and the perps are not kind of catching up on the situation, this can be an indicator of the kind of a higher time frame accumulation, basically, so that the kind of a larger participants, buying up this thing ahead of something which might be coming. And once again, this is fairly liquid market, so you can actually use a normal kind of stop. You can see there is a little bit of a cluster here, for example. You can just place your stop below the low, but you are trading an altcoin, and you are, at the end of the day, this is not really moving today. You have this kind of cluster here. You can see kind of the classic thing. I'm not going to go into TA much here, but if you would take a trade here, it's a altcoin trade. It's a trade that is kind of a huge correlation to everything else in the market, but you have kind of this data. You came to the trade not from opening a chart and drawing a bunch of lines and be like, okay, this is looking good on this hourly time frame. We broke the structure here. You have a cluster here. I'm just gonna go long because of that. You have this kind of a situation going on, which might be indication of some sort of higher time frame. So some sort of a bigger picture of this kind of a spot market buying thing. And the same thing is, another thing that popped up was this thing here. And once again, this is, very high negative funding, price going sideways. The open interest is rising quite a bit, which is, I suppose, the new longs are stepping in. There's also this kind of open interest to market cap ratio, which just kind of shows this kind of a oscillator of basically how many open positions are in a in correlation to the market cap, basically. So if you obviously don't know, open interest is basically how many contracts are opened. If once again, I'm not the best person to explain this, because this is not something that I have been using much in my trading. But basically, if you open long, that's a if the new long steps in, open increased. If the short steps in, open interest increases as well. But if these things are getting close, then open interest is decreasing. Like I said, I'm not sure if the best way would be to do it the same way that most people on Twitter are doing it. I'm just looking at these. I couldn't care less if this would be, if this would look like if it would be smaller number, or if something on the left would be looking at different. My point here is that you are looking at these kind of a unique situations and trying to basically pick up on the things that no one picked up before you. And you can see for all these type of coins, huge change in open interest. All these, this thing, I see this, someone talk about it on Twitter today, it's up 20% in last 24 hours. And this is usually people already chasing it, so the open interest in this case is kind of a reason that, price went up a lot, and people starting to, buying longs, so the open interest will obviously increase. But for some of these cases, when these markets are just kind of a 1% up a day, 2% up a day, it's worth looking into what type of market it is, and if there is not some kind of a underlying thing going on which might be interesting to trade off. So this has been the open interest. The last thing is the cumulative volume delta. If you're gonna go to indicators, you basically can plot these CVDs like this. So you will have 3 cumulative volume delta. The people thing doesn't have a this thing, so I will go to actually something that I spoke about. The waves trade was this kind of a big deal on Twitter a couple months ago. Basically, we had, I don't know, it was just another kind of typical Twitter mania over something, which went up a lot. Everyone was chasing it, and then it kind of sold off and went to, $6 from 60 in the last month or so. And obviously, they had their own stablecoin, which I think is DPEG now, and all these kind of things. The point is here, if you're gonna take a look at the CVDs, once again, this has only 2. It has a spot market and it has a stablecoin market. Little trick on the coin analyze: if you click on this and drag it above, you will have it in one window. You're gonna go to style, let's change the color. That's kind of a nice thing. If you're gonna go to inputs, sometimes you will notice that you'll open a CVD for a market and it will just go one direction, like insane, way. Try to test all the exchanges that are offered, because I have seen, for example, Femex, which is not extremely relevant exchange in my opinion, has this kind of a tendency that their cumulative volume delta tends to skew the whole picture a lot. So I would kind of go and test if it's something, not ruining up your cumulative volume delta. Overall, it's kind of a good idea when it comes to perps. Keep it, on FTX, Bybit, Binance has also this kind of tendency to be extremely aggressive on one side or the another. But FTX and Bybit is always very much reasonable. And for this example, obviously we're gonna take a look at that. Binance, because the Binance was here where it actually played a little bit of a role. This, funnily enough, doesn't look how I thought it's gonna look. And I posted it on the Discord today, and for some reason now it looks completely different. Okay, let me actually find that. It's gonna be easier. I must have kind of changed some sort of settings. Definitely these things are a little bit messy, so you can get little, lost in it, which I just did. But this is, this is a different market. This is a KNC. This is waves. That's why it looked different. For this case, there is not so much of an edge, obviously, because you can see that in this leg, you had this kind of a very aggressive market buying from the perps, but spot was extremely late on this. There was this huge spot sell, already down in this kind of area. And you can see, even open interest, this was kind of a very messy thing. What you actually want to see is something like this. This is another, extremely overhyped coin, where we had this rally. Obviously, from the TA perspective, you are getting these types of confluences. You are basically rallying with a huge amount of compression, below the market. So this is your first sign that this is very likely to get run over, because obviously everyone who buys all these dips, they are making money, which, as you probably know, is not a good indication of a healthy uptrend. But you can see this. The spot cumulative volume delta, around 25th, basically flattened out. There was a little bit of buying here, a little bit of buying here, but on this last leg, which still made, 25-30%, this is very flat. This is no new highs. You have these kind of divergences. Obviously, you make a high here, you make a higher high. Spot CVD is not really interested in buying here. No spot is basically being bought. So this kind of a heavier, larger players basically who, don't really have a need to hold futures. They are not buying this thing. But if you're gonna take a look at this stablecoin, futures, it's completely different pictures. They're just chasing, all the way up to the move. And once this thing starts to slow down, you start to kind of lose any type of market structure. This is a 4-hour chart, so you can go to the lower time frames. This absolutely kind of shits the bed. And once again, this is current kind of a picture, I think, at least. You can see this kind of a stablecoin futures are still not too much to puke. This is just mostly the spot that just kind of sold off very aggressively here. So there might be a little more for the downside here. But like I said, when it comes to higher time frames, the cumulative volume delta can get really messy. This is why I never used it. But you are mostly interested in this kind of a spot futures relationship. I'm not really sitting here wondering why this is not moving lower. If they still holding it, they might. But what is important for me here is this kind of a relationship here. So this is how I would look at the aggregated cumulative volume delta when it comes to spot and futures. Spot being the heavier hand, you want to see them basically go with the trend if the trend is strong. If they don't, you should start paying attention. So these are few things that I wanted to cover. Like I said, this is not something that I've been doing for a long time, and I'm still learning a lot myself, but I felt like this would be a kind of good primer for you to do your own research. The FTX Premium website, you have a lot of nice kind of statistics. FTX, the futures premiums are kind of dead now. These are your carry trades basically, where you buy spot, sell futures. This thing basically here, but this is not really a thing now since we are in a downtrend. But these kind of funding rates are still tend to happen. You will still have these things popping up from time to time, and have a nice kind of a few day opportunities to take advantage of that until obviously they will be gone. Besides that, take a look at the Livetas, follow them on Twitter as well. They have a really cool account. It's called Livetas Research or something like that. They post a lot of option stuff, which is really cool. They will often post some like huge buying options flow basically when someone buys in a lot. So that's definitely good kind of a research to have. The one last thing I wanted to talk about, this is for really a day trading purposes. If you have a coin which is not trading on any exchange and you want to be kind of for example, if this is the situations where We had a the Bored Ape, the ape token, or when we had the Lux Perp, token. Uh, these things, if you think about it, and or the GMT thing which happened, on Solana recently. These DeFi things, people who trade them actually, most of them don't even have an kind of FTX account. They have no idea how futures work. None of that stuff basically. They don't care about that. They downloaded MetaMask, bought a JPEG, directly through it. You can, buy Ethereum on MetaMask. And they never really use an exchange. So in some cases, the flow of the token will happen actually completely on the on any type of DEX. There is this GMT thing. I think shouldn't be on a Solana. Okay, let me check it. Per the ape coin. You can see 22 million volume. Obviously nowadays, since this got too big now, it's traded quite well on FTX as well. But what I wanted to show you, and this is definitely for a very much a shorter term trading, you can you have your normal kind of a trading view chart once again, and below it you have a tape. Basically this is just a normal, how you would see a times and sales on DOM or any other platform. I don't know why I cannot scroll here. Again, no idea what's going on here, but you basically see all the trades coming in through here. So in a lot of cases, when the tokens are new, when they are from the DeFi space, you can actually find a nice kind of a opportunities, trading it based on this chart. Once again, like I said, this would be your kind of a 1 minute, 5 minute scalping when you are just trading this new thing with a flow directly coming from a DEX. So and obviously this is not moving much now, but when things are really moving and when things are interesting, you will see huge sizes going on, and you will kind of see how markets is reacting to that or not. So this is just one of the things that I know not many people do and know of, but it's definitely worth to watch these kind of a huge sizes coming from the DEXs. Okay, so I think this was everything that I wanted to talk about. From, like I said, this thing, would be your most useful thing to looking at these kind of a unique opportunities from both funding and these kind of changes in the open interest, which can indicate basically, like I said, accumulations or distributions, in the market. And if you will be able to connect that with your TA, then you can find really nice trades. Obviously, just like I said, pay attention to the volumes because these things can be thin. Okay.